Okay, so welcome to the first class of Playing Guru University ever. So this is our sort of the first time we're doing this. Obviously, I've probably had the opportunity to speak to a number of you. My name is Christian Weilage. I'm the CEO of Playing Guru. We have what do we have? 55 out of 85 people, I guess. Not too bad. We're excited that we've had this many people in the webinar right now. I guess maybe I'll just actually show you my bio real quick because this isn't Playing Guru University. Obviously, a huge portion of it is about learning Playing Guru, but you know what? Maybe as important or more important is sort of sharing with you the expertise that we have acquired, both here in my work at Playing Guru and the team's work here at Playing Guru, and in my past career, before I came to Playing Guru, I was the worldwide plan analyst for IBM's Global Technology Services Group, building $35 billion budgets for all the geographies of their services business. Before that, I was the sort of working across all the brands for IBM North America, doing a similar activity involved in building the budget at the beginning of the year, and also involved in the monthly review process, putting together massive PowerPoint deck for our CFO and things like that. So hopefully I can share some of that insight with you. Like I said, in addition to sharing best practices from you folks. I mean, I've learned a tremendous amount by speaking to you throughout the years and coming up with good ideas. So just wanted to start with that quick introduction of myself. Now, what I want to do is just sort of bring up the website here real quick, the Playing Guru University section of the website, and just recap. The first thing here is, it's Playing Guru's free for those of you who are, financial professionals who own the enhancement package with the advanced reporting add-in. I know there might be a few people in this meeting who have snuck in without meeting the full requirements, and a few of you have been, few of you have been given authorization to do so based on the fact that you've just come to us in the last couple of days. But just to be clear, in order to graduate, I mean, if you do, graduate from Playing Guru University, we're going to send you a PDF cool-looking diploma that you can print out. We're going to give you a badge that you could display on your website or in emails that says you are a graduate of Playing Guru University. And in order to do that, we really do need you to have the most recent edition with all the bells and whistles. So this isn't just, we're not trying to make more money by putting these requirements in place. It's really a matter of, we can't authorize you as a user, a graduate, unless you are sort of up to speed with the software platform. The syllabus, this is my first time through the course. I think I'll get a lot of feedback as we go through this. Maybe this is going to change a little bit. Maybe it's going to evolve over time, but obviously it's sort of progressive layers of adding more and more information in terms of where we're going and what we're going to do in each class. Here is the class schedule. Now, a number of you have already told me I'm going on vacation this week. I'm, I can't make it this week. I understand, right now I believe the official policy is that you can miss one class, one live session. We will be recording everything. So you will be able to come to the live session. You will be able to watch the recordings. If you miss the session, you will be able to then watch the recordings. We might do some verification process to make sure you did watch the recording. If you've got to miss more, come to us, come to Thomas. I'll introduce Thomas in a second, but he's helping me out here. Let us know if something else comes up. That being said, I really do feel like it's a lot more valuable if you're here live, engaged. That way you can cultivate a series of questions. You can, as we're going through the course, you can send those questions to Tom. You can send those questions, you can raise your hand and ask a question at the end. But, just in terms of, so anyway, So in order to be able to fully partake in the experience, I'd like you to come to as many classes as you can. Here are the graduation requirements. Each class is going to run for 60 minutes. You are only required to show up for 60 minutes. So if you sit here today and at the end of 60 minutes you're like, oh, I knew all that, you know, goodbye, no problem. But I encourage you to stay for the half-an-hour question and answer session, because I think that's really the important part of the live process. I think you'll be able to learn stuff by listening to other people's questions. Just in terms of how the questions will work, you know, I encourage you to send. Hey Tom, do you have I just got a question from somebody saying that I'm breaking up, that my audio is not great. Do you observe that it's not working properly?
Hey Christian, your audio seems to be good from my end.
Okay.
So I believe we should.
Suzanne,
Yep.
I think it is yours, unfortunately. Okay, great. Sorry, just wanted to make sure everyone could hear me. So in terms of questions as we go through this, feel free to send questions in. If you want to type out the full question right in the heat of the moment, send the question in. Tom, you know, when a pertinent question comes up, Tom's going to interrupt me. You know, we do have to get through the whole thing, so you know, I don't know how many questions he's going to actually be able to ask, but you know, that's sort of method one. You know, method two is just to say, hey, Tom, I got a question about this. Please call on me at the end of the meeting. And so, you know, at the end of the meeting, we're going to start unmuting you individually, giving you a chance to ask your questions live. But there, you know, I can't promise you we'll get to all questions. I can't promise you if you ask a question as we go that we're actually going to be able to field it, but we will do the best that we can. Once again, you can review all these. I mean, you really do need to attend every class. If you miss a class, we can, you know, you're probably not really going to have to do those office hours, but the office hours are, you know, there's a $50 charge for an hour-long office hour, which we think is a phenomenal deal. And so if you need help, if you didn't understand something and the recording's not doing it for you, we do offer sort of some incremental teaching. It's available to you, but you do need to attend all 6 classes or watch 1 and attend 5, and you do need to complete all 5 case studies. And you know, today, halfway through the webinar, I'm going to talk about the case study that's going to be due for next week. The final thing I'll mention here, I know this is not applicable to everybody in this meeting. I know this is just the first PlanGuru University, so you don't exactly know where might fit into your practice. If everything I've been telling you is true about the opportunities to take this product and really transform your current business, you know, obviously you'll attend this webinar, and you know, we have the idea in mind of sort of creating what we call a financial forecasting analyst inside of bigger firms. Obviously, if you're a sole practitioner or just a two-man shop, this is probably not applicable to you. But those of you who are in sort of bigger firms, I encourage you to sort of read this idea that we have here. You know, we know that it's sort of worked in particular situations, but this is sort of an idea that we came up with to sort of facilitate mass adoption of PlanGuru by all of your customer base, and that's by creating a real dedicated expert. Maybe you are that person inside of a bigger firm. You're already here, but so great. I just wanted to kind of get some of that housekeeping out of the way. I already gave you my introduction. Some other sort of high-level, thought-provoking stuff before we get into the nuts and bolts here. Obviously, this isn't going to be the case for all of your clients. You know, there's situations that are more complicated that are not going to be this clean and easy. But for your average small business, we truly believe that, you know, this sort of the time frames described in here are completely achievable in terms of setup and import. You know, many of you probably know, I will show you later, we can get a custom tailored up model up and running in 5 minutes, not 5 days, okay, in the old world of model building in Excel. there's not this, in the past, there's this huge impediment to doing this business, and that's the fact that you got to get them to agree to build the model to start doing the serious work, and that's a costly thing for everybody. You spend a lot of time on that. With PlanGuru, that is eliminated. You can run an import. You can, in that middle column, it says forecasting each account. You can even go so far as to populating PlanGuru with vanilla assumptions and sort of prop up a custom tailored model in 20 minutes of pre-meeting prep to then cut straight to the value add discussion of what did we do here last year, what are we going to do here next year, how can we get better. We'll get into that as we go along, but that sort of transition from having to spend all this prep time and client doesn't want to do it, I can't get them to do it. No, it doesn't work that way. You know you're meeting with the client for whatever, some other reason. You whip up a custom tailored model for them, 20 minutes, and you put that in front of them. I know one of our all-star advisors here, Dave Maybaum, is in the meeting. If you watch his unbelievable testimonial at our website, he talks about how the client's eyes light up when you put this in front of them sometimes. And instead of starting that high-level discussion that's about building the model for which you need this big retainer, you can just cut straight to putting it in front of them, watch their eyes light up, start asking them questions, and there's no sales process. You just start doing it. That is the idea. We want to teach you to be able to do that, that's why we feel like you can really take this and broaden it across your whole customer base. On an ongoing basis, obviously you can, when you finally put the computer down in front of the client and sit down and refine your budget, you could spend a day, you could spend 2 days, you could spend 3 days refining that budget, coming up with intelligent assumptions, but that's all value add time, that's all driving intelligent discussions that are going to force that client to make better decisions, and you can charge them the whole way. And then on an ongoing basis, the non-value add work of importing your actual results, doing your budget versus actual comparisons, in simple situations, a single workbook can take, once again, 5, 10, 15 minutes pre-meeting prep to actually get the numbers in there. Obviously it's not always that easy, but once again, we are knocking down all that non-value add time, exclusively focusing on that value add time, and it totally shifts the dynamic in terms of what the client's willing to pay and what you're able to offer this service at. Obviously, you're still going to do the quick budget for the bank. Obviously, you might do the 10-year strategic plan once a year, but the real way that you can sort of bolt on an incremental revenue stream to your existing business is you sit down at the beginning of the year, you build that operating budget, and then on a monthly basis you do the review. This becomes a monthly fee that is not only great for you, but this is all I did at IBM. I was one of 10,000 employees who spent nothing, did nothing else except sort of prepare decks at the end of the month, and kind of for our CEOs, you know that your small and medium-sized business, and many of your medium-sized businesses are not doing this at all. And this is the most fundamental exercise in terms of financial performance review that you can do. You can deliver them a service that nobody else can do without PlanGuru. So, and there's just kind of one other final prep, sort of high-level thing here to kind of break down some of those old conventions. And a lot of your clients have tried this stuff before and failed, so they have a bad taste in their mouth. They've never realized the benefits. They don't know what they're missing. You need to show them they're missing something, and the only thing I can equate it to is sort of like going to the gym. It's just, it looks like a pain. If you or from 200 years ago, you'd probably say, why would I go do that? But that exercise will make your business stronger. It will make the business more profitable. So enough of the high level kind of thought-provoking stuff. I know for some of you this is very old. let me put this, warning. This first class may be very boring for many of you. I apologize to the Dave Maybaums and the Jody Grundens out there. I'm sure you know everything I'm going to go through today, but I've got to cover it all. And also, I'll sort of apologize in advance. I believe there are a few businesses in here that are not in the not in the business of selling financial services. You're just here so that you can use PlanGuru better for your own business. I'll apologize to you because I'm going to spend a lot of time talking to that other group of folks who are in the business of offering this as a service, but don't worry, you're still going to learn a ton about the product. Now, this is sort of the outline that was on the website in terms of what I want to go through today. I'm going to just basically take it from the top in terms of explaining to you how you set up a new analysis from scratch. I'm going to talk about a number of different scenarios. I'm going to talk to you about how we can manipulate an analysis structure. I'm going to talk about how to create an analysis from scratch, and that's when we'll get into our case study for this week. QuickBooks import I'm going to run an Excel import for you, and then I'm going to talk about sort of just making some structural changes and what goes into that. I will make one final point before I jump in on the case studies and kind of on the graduate. I should have mentioned this before. I recommend that you do the case study for next week, okay? That's my recommendation. That being said, this is a rolling thing. If you miss a class and you don't want to watch the recording, you can make it up next semester. If you don't do the case study this week and you don't do it next week, it's okay. At the end of the semester, when you want that stamp of approval, when you want your diploma, you will need to complete all the case studies in order to get certified. And in the future, many of you have been around for a little bit. You may remember our PlanGuru community site. We have not given up on the community site, but we have sort of taken it down because we are now in the process of folding that directly into our website on a much, much more robust and better platform. So just as another incentive for you folks, once we have that community site up and running, those of you who are full PlanGuru University graduates will be designated in a special area, and sort of customers, businesses that come to our website will be able to find you as a authorized graduate of PlanGuru. So that's another added benefit to really get in. Of course, you could show up to 5 classes and then just quit and you know a whole lot, but I do want everybody to graduate and follow through with this because that really will make the best learning experience. So, a couple I have a couple questions here that I actually will answer because they are not related. We are going to create a Dropbox folder. We are going to give everybody access to that Dropbox folder. I will put the slide deck in there. So there you go, Jody Pradar. Yes, the sessions will all be recorded. If you miss a class, you can watch it. Technically right now I'm only allowing you to miss 1 live class, but if you have a really good sob story about why you got to miss 2, I'm a softie. You probably be able to do that, but once again, I encourage you to attend the real webinar. So, before you jump in, before you set up your model, before you run an import, there are some questions you need to ask yourself about any particular exercise. And I've got a lot of documents I'm dealing with over here, so forgive me. So whether, and just to briefly, most of you have probably seen this slide before, operating budget, strategic plan, issuing external estimate, decision analysis. If you take any project that somebody comes to me with, you can truly fit it into these 4 buckets. We're trying to build the budget. We're trying to do budget versus actual comparisons, rolling forecast. We're trying to build a 10-year strategic plan to see how much cash the business owner can expect to receive over the next 10 years. When can they retire? issuing an external estimate, going to the bank. Those exercises tend to be simple. Those exercises tend to not take a long time. And then finally, decision analysis. Your client's thinking about opening a new location. Your client's thinking about acquiring another company. Clearly, these are all very popular usages of PlanGuru. Now, the reason why I just showed you that slide is it's sort of in the context of this discussion. As accountants, you know, not to throw a broad brush here, I'm sure this doesn't apply to everybody, but you know, you're used to calculating everything sort of at the deepest detail. You know, everything has to be in the right bucket, everything has to roll up, you know, accounted to the penny. We are not accounting here anymore. You know, we are transitioning, you are using the accounting data as a foundation, but we are moving forward and looking into the future into sort of a finance exercise. And sometimes you need to let go of some of those, you know, characteristics that are awesome as an accountant. You need to sort of be able to let go and trust that a finance exercise should be done with the correct structure, not necessarily the most detailed. Now, there's many times where detail, every single last customer or, you know, you name it, yes, there are many times where that's very important. But this sort of question I have here is an anecdote from my job at IBM. I'd walk into my boss's office and we'd be working on a problem, and I'd say, what do you want me to do here? Should I show the 5 groups, or do you want me to show all 35 individual subline items? And he would say, show me the detail, or we're not that good. You know, and we're not that good is just a funny way of saying sometimes when you get too down into the weeds, you sometimes end up creating more trouble than it's worth. It becomes a distraction to the exercise. So you know, every situation's different. If you're doing that detailed, big operating budget line by line, you're trying to create tons of accountability. You've got multiple managers that are involved in the process. Yeah, blow it all out. Show all the revenue types. Show all the individual divisions, departments, locations. But, you know, let's say you're doing that 10-year strategic plan. Sometimes you're just going to want to do everything at the consolidated level. Sometimes trying to get into all the sub-line items, you know, 10 years out from now becomes a fool's errand, and you're better off just sort of grouping them into the types. So just, you know, wanted to bring up that one final sort of thought-provoking thing. Now, what I'm going to do here is this, you know, I have some notes in this deck. It's sort of more for me to follow. Instead, I'm going to kind of bring up PlanGuru and walk you through the process of creating a new analysis for the first time. But I will sort of flash up that slide as we go along, so that when we record it, it's not going to have tremendous level detail, and it's just sort of thought-provoking things. Most of what I'm going to show you is going to be live in the product and through my words. So the first time you kind of create a new company in PlanGuru, you add a new company. I always say to people, you should really name the company after the project, because oftentimes you're doing a strategic plan for one of your clients. You're also doing an operating budget for one of your clients. The fact that we use the word company can be a little confusing. I personally say a company is really just the name of the project. So I'll call this the XYZ Sample Co. budget. Okay. This entity type really does not do a whole lot, except if you were to select a nonprofit entity, it would eliminate the provision for taxes. So it's just taking out some of your classes, some of those blue groupings that are in PlanGuru, but most of the characteristics that are implicit in entity type can either be added or deleted later if you were to do the wrong thing. Fiscal year. Always, always, always choose the true fiscal year of the company that you are working on, okay? Even if you are starting something mid-year. You do not want to, if you're starting something mid-year, you do not want to choose July, and this is a structured thing that will continue to roll into the future. You always want to choose the company's real fiscal year. Now, by the way, the section I'm in right now is time parameters and other setup. Account numbers. Okay, let's just a few things here. Account numbers are optional. Only use them if you need them. Some companies talk in account numbers. Account numbers are a very crucial part of what they do. They need them. If they don't work that way, you don't need the account numbers. We can use up to 12 characters with a separator. And obviously, the account numbers need to be reworked sometimes. And the primary reason for the fact that account numbers need to be reworked is because, you're doing sort of a multi-departmental situation. For example, let's say we chose account numbers and your client had a structure where it was, this was the name of the division. These first two number signs were the name of the division, and this is the whether it's revenue or cost or expense, and then they had one more separator, which is actually the sort of the detail within that. Clearly, if you're doing consolidations, you need to sort of remove the part of the account number that accounts for subcomponents of the company. When you do a consolidation and you want to smash the lines together, they all have to have the same account number. So I'll sort of rephrase that again. In multi-departmental division location, remove the portion of the account number that delineates the subcomponents. Okay. Now, I didn't think of this until about an hour ago, so I don't have it for you yet. But on this it goes along with this and other pieces of getting an import ready. But if we are going to create an Excel file, we are going to create an Excel file that has sort of like a function key. We help clients take their raw data out of their ledger and translate that into a format that PlanGuru can read. And a lot of times a big part of that is account numbers. So in the next couple days, in the Dropbox folder, we are going to be putting an Excel file up there that has a tremendous number of functions that we commonly use to help people with that. So, a lot of times reworking the data out of sort of an old arcane accounting system. For those of you who are not using the QuickBooks import, taking data out of some old ledger and reorganizing onto a front tab so that you can import can be one of the most daunting parts of this. So along with translating account numbers and reformatting data, we are going to come up with that specialized Excel file for you that shows some of our most commonly used functions. I'm not going to use account numbers for this example. I'm going to use them later when I import from Excel. So let's we've created the company. That's the name of the project. Now the analysis name is going to depend on the nature of the project you're working on. Maybe your analysis, the first one you create is a January budget. And then later on in the year you create a February forecast and a March forecast. Maybe you're doing multi-locational, multi-departmental, and the first analysis is actually just location 1, okay, or department 1. Let's say you're doing a 10-year strategic plan with a sensitivity analysis. Maybe, and the analysis name is base case, okay? Just whatever, hopefully that's clear. Analysis type. This drop-down box does not do anything except change the labels on your reports. So don't fret, you can't get that wrong. Okay, now this question here is a very common place where mistakes are made. It says enter the year that the first fiscal year you are budgeting for ends in, okay? Usually a straightforward question. It's basically, obviously the way we phrase it, so, is if you don't have a January fiscal year, say you're starting right now, you're building a budget from July, say you've got a client that's got a July fiscal year and it's running July 2013 through June 2014, then you would choose 2014. I'm just going to sort of build a budget for the current fiscal year that we're in. So I'm just going to leave it at 2013. Now, I don't know if there is anyone in this meeting that I'm not going to get into the VAT tax tool here. I think most of this is a U.S. audience, and it's be a little bit of a waste of time. But I will talk about the VAT tax tool in later sessions for any of you who may be in Europe or Africa. So I shouldn't say VAT tax, that's redundant. So the value add tax or a GST type of thing. Now, the next question we are asked is if we want to add a blank template or copy an existing analysis. Actually, I forgot something. Good thing I have my notes here. One common area where people don't know what to do, and you will encounter this in a couple months, but let's say you are sitting in October of 2013, and once again, it's January fiscal year, but let's say you are sitting in October of 2013, and your real goal is to build a 2014 budget, okay? You're not worried if October, November, and December are a little goofy. They don't need to be perfect because you're just using them as a placeholder. So if that's the case where you don't need to be perfect, it's really just you're sitting in October, the goal is that when January comes around, we've got an awesome budget ready to roll. Then oftentimes you'd actually want to start that in 2014. Even though we're sitting in 2013 and 2013 is not over, you want to set it up for 2014 and load into the historical section the data for 2013, and then for October, November, December, just throw some placeholders in there. Hopefully you can, if you're importing out Excel, you can just import some fake budgeted numbers. It just, might make it easier for you. That being said, maybe not. It kind of, once again, depends on how good those final months need to be. If you're working on a client, you're sitting in October, and the bank wants a 12-month rolling forecast, well, of course, October, November, December need to be accurate. Therefore, you probably want to set it up in 2013 and roll it for use actual results for the first half of 2013. Hopefully that makes sense. I'll come around to that in a second. So let's move on here. Like I said, if I know maybe Canada, you might use some VAT, but some VAT, but I will cover that in a later course. Okay, so hopefully that made sense. Actually, let me just flash a diagram of what I was talking about here real quick. And this is just a simple example of where we can, we can use actual results. So, if you needed October, November, December to be accurate, you would use actual results like we are for these first 3 months through September, and then you'd budget October, November, December off into 2014. But if it's just sort of a placeholder, I recommend you start it in 2014 and just in the historical data section load some information. I did sort of attending the overview webinar was a precondition of this, so I hope most of you understand the terminology I'm talking about. If not, then let me know. Now, the next question we're being posed with here is whether we want to add a blank template or copy an existing analysis. Most of the time you're going to be adding a blank template. Copy an existing analysis, though. Most of the time, I'd say for 80% of the exercises, whether you're doing a strategic plan and you're doing a couple different, a base case, a high case, and a low case, whether maybe you're doing multi-departmental and you want to create, you create your first division, you replicate it time and time again and rerun the import. Most of the time you're not actually going to use this copy an existing PlanGuru analysis because inside of the tool up in the file menu we just have a save as function. So the only time you can just save as, change a couple assumptions, you got your high case. But you can the most common time that you're going to copy an existing analysis is when you want to change something that's sort of fundamental. You want to change it to a different fiscal year. You want to you've used actual results for half the year and you want to roll that back and actually get rid of the actual results. So it's the copy and existing analysis is a nice feature for when you have the structure set up, but you need to make some sort of fundamental changes that you cannot make up inside of the edit menu. And like I said, some big changes to time parameters are a classic example of that. Obviously for here, I'm just going to add a blank template. So let me flash up my my PowerPoint deck again, just to. Sorry, I'm juggling like 12 different documents over here. I always say, you know, when you're putting in the number of years, add an extra year or two. You can always, you know, people come to me all the time, they built their budget for 1 year and then they realize that they need to do a rolling forward-looking 12-month forecast. It's not a problem. You can always go in and add additional out years later, but if you put them in there from the jump, you're going to find it makes your life a lot easier. A lot of the assumptions, you're just going to carry those assumptions out into the future so that you're just naturally, as you're building your first couple years, those back years are beginning to get populated and refined, whereas if you come in after the fact and add more years later, there's going to be no assumptions for those out periods. You're going to have to reset them. So I always say to people, to be safe, add an extra year or two on the back end. If you never refine those assumptions and you never look at them and you never use them, they don't hurt anybody. Just don't run the report, right? But you know, in the people often find themselves and they built the budget for 1 year, they should have built it for 2, and it creates more work sort of adding it later than it does just creating it from the jump. Now, for your case study, and I'm going to get to this in a second, I want you to at least make the budget 5 years. This is in the requirements of the case study, and I want you to do interim periods for the first 3 years. Now, I'm going to just focus on this word interim period, this phrase interim period, because it's a phrase you're going to see over and over and again throughout PlanGuru, inside of our forecasting methodologies, inside of other windows that with setup options. Interim period simply means months or quarters, depending on what you want to budget for. Now, obviously, every business is different. I would say the vast majority, and I'm talking probably 95, 98% of the analyses that I see are budgeted on a monthly basis. That being said, some businesses that have a big, long sales cycle, you're not selling, small items every day. You're negotiating big long contracts that tend to close at the end of the quarter. Sometimes a business like that may make more sense to budget on a quarterly basis. But for the purposes of the case study, I want you to at least do 5 years, first 3 years by interim period. And as I was saying before, that phrase interim period, you're going to see it a lot. Anytime, if you choose months, in the initial setup, anytime you see that phrase interim period, just reread the sentence, replace it with the word months, and the sentence will make more sense. This first box, my general recommendation is don't touch it. Okay, I'm going to briefly show you what it does, and I hope my developers don't listen to the recording of this and think I'm making fun of them or something, but I don't understand why we have this functionality. This first box, if you were to choose, start the budget in, I don't know, was it April? Did I say April? Yeah. If you were to choose start the budget in April, what it does is it sort of straddles this, you have the one historical year, which is then sort of truncated into 3 months, and then you have your first budgeted period, which is only, 9 months long in this particular example. Personally, I just don't like this. there may be some reasons why you would choose to set it up this way, but my general recommendation is just leave this first box alone. I can't tell you how many times people mean to use this box, okay? And they accidentally use this box, this first one. So this first one is saying if you actually want to start the budget at something other than the first month, it will truly start the budget mid-year and bring actual results in. Now, the more common way to set things up, and the way that I recommend you set up nearly any scenario, is to use actual results through the first portion of the year. And that's what this second box does. This is saying if I were to set this up, say use actual results through March, it would take the actual results from the hidden actual results section and it would bring those inside of the main tab. Like I said, I recommend you use that as opposed to this in almost any situation. I'm just going to kind of set this up for, to be at the beginning of the year though. Historical periods. Now this is saying how many periods worth of historical data do you want to bring in to your model. A couple of points here. We use historical data we use historical periods for two reasons. One is that it's used and the forecasting, we use that as the foundation. A lot of our forecasting methods are based on growth rates and historical relationships. And then obviously we use historical data for reporting. So even though you might not need data from 2 years ago or 3 years ago to help you forecast, later on I'm going to get into the PlanGuru Advanced Reporting add-in. Sometimes it's just nice, even if the company's dramatically changed over the last 2 years. Sometimes it's just nice to have multiple years of historical so that you have access to that within all of your PlanGuru reporting tools. And the big thing I underline here, which is the single biggest mistake that I see in the setup process, and that is that people, they select, oh, I want 3 years of historical data, boom, they move on. And then they get to the import tool, and the import tool will not let them pull the data in on a monthly basis. It is because they did not show interim periods or show months. So what I'm saying here is give me 3 years of historical data, and for all 3 years I want you to put the structure in the model to house monthly historical data. Next, seasonality profile. The seasonality profile is used to tie a series of line items to the same SKU, and it is leveraged by many of our forecasting methods. So if you have irregular historical data, maybe you're starting from scratch on a new company, and you know that a certain series of accounts are going to follow a similar SKU, you can manipulate this seasonality profile to fit that, and then using a variety of our different forecasting methods, say apply, calculate the number on a full year basis and apply this SKU to it. Fine, this is our final setup question here, and that is, you can suppress the balance sheet. You can suppress a revenue section if you are doing a multi-departmental situation. I will say the balance sheet never hurt anybody. If you don't know whether or not you need a balance sheet, then leave the balance sheet in there. And just sort of one thought here, and that is that I might be getting a little in the weeds for this early, but sometimes, you've got an account like receivables. Let's say, let me just bring up this little diagram here. And this is, imagine this is sort of your total company. Shoot. Let me bring up something different here. Okay, here we go. So let's just say this is your total company. This is just my Excel diagram that I show in my webinars. you know, all your revenue and all your income statement accounts, you have them at the lower levels, but the balance sheet accounts are not, you know, like you don't account for AR division by division or location by location. You know, AR is only accounted for at the total level. So I don't need my balance sheet, right? You know, or maybe not. While you may not track it at the lower levels, for the purposes of calculation, for the purposes of coming up with an accurate forecast based on your revenue, you may want to budget for something like accounts receivable at the lower levels. Now, you'll never run a budget versus actual comparison at the lower levels, but the aggregate of the roll-up of the lower levels will be where you measure that performance, you know. So hopefully that made sense, you know, but it's, you know, once again, a reason why some people think, oh, I don't need a balance sheet, and then we get into it and we think about what's the most intelligent way to forecast this, and sometimes the summation of the piece parts give you the most accurate forecast, and it still makes sense to use that. And finally, we give you the ability to use the direct or the indirect cash flow. Obviously, this is a new feature in 2013 for those of you who were asking for us to bring back the indirect cash flow method. And there I click finish. So what I did there is I, you know, was really kind of going through my time parameters and other setup. Now I'm going to move on to analysis structure. Now I don't have quite as many notes for this, but it's pretty straightforward. Now I'm going to move this window over here. You know, the first window, the first question you have here in the account structure is that we give you the ability to suppress non-relevant sections. So if your client is a service company and they do not have cost of sales, then you want to deselect cost of sales, click OK, and it will eliminate cost of sales. I'm just going to leave it for now. So here is my analysis. As you can see, I've got 3 years of historical, all by month. If I come up to my edit menu under analysis setup, you can see that 3 years of historical, most recent by month. We use a lot of Excel type conventions in here just because that's easy, but this is not some dressed up Excel for those of you who are really new to the game. And as you can see, we've got 5 periods of forward looking, first 3 by interim period. So here is our setup. You can add new expense classes. Okay, so we can add new groups in addition to deleting those groups. If you forgot to suppress cost of sales, you could delete cost of sales. So we have this high-level structure that can be tweaked and can be manipulated to really sort of fit any individual client situation. So you can, and all you do to change the structure, whether it's adding new or deleting, is you put your cursor on the class, not to be confused with a QuickBook class. But you can delete this. You know, inside of a PlanGuru worksheet, the term class is simply referring to these blue groupings. It is not, has nothing to do with QuickBooks classes. For those of you who might be confusing those two things, it's understandable. But so you set it up, you can add additional classes, you can delete classes, and then you're going to run your import tool. Now I'm going to table that. I'm going to table the running of that import tool. I'm going to open a different analysis just to demonstrate some other brief things I want to talk about in terms of structure. This is my 20 Forecasting Methods company. It's my good old go-to in my webinars. So the next thing I want to talk to you about, you know, so obviously I'm jumping over the point of how we get everything in here. I'm going to come back to that in a second. I just, like I said, want to structure on I want to focus on the structural elements. I've also realized it's 2:50, and my fears about not having enough to talk about were ridiculous because I'm now like way behind in this session. So because of the housekeeping at the beginning, but bear with me. I might have to eat into our question and answer session quite a bit. But We have subtotal groupings. I can add a subtotal grouping. Okay, I can expand and collapse that subtotal grouping. You need to put one of these in your case study. We also have supporting schedules. A supporting schedule is a drill down off of the income statement. We have two types of supporting schedules. One that is by default a sum, just sums everything up. And then we have a different type of supporting schedule where we can do mathematics, we can do equations amongst the areas in the subline item. And then finally, in addition to subtotal groupings, supporting schedules, we also have the non-financial data tab. I'm going to basically have a whole half a class on the non-financial data tab. It is a very crucial part of the program, but it is another place where you can sort of work out the individual characteristics of a business and use that information to roll it up to the financial statements. So, and how do you add a supporting schedule? The subtotal groupings, you just simply add them by highlighting, right-clicking, adding a subtotal grouping, and supporting schedules, you add them by simply putting your cursor where you'd like to insert that supporting schedule and saying, I would like to add a new supporting schedule. And that's where you choose whether it's a sum of listing of items or an amount to be computed. The other important element about a supporting schedule is you are posed with this question of whether or not you want to import the actual results at the total level, or you want to actually enter the results line item by line item and have that roll up into the total of the supporting schedule. So when it comes to this historical information, the question is simply, so by default it's this historical, by default it's the actual amounts, which is simply going to mean you hard-code it at the highest level. But then again, you can say, no, I want to get down into the nitty-gritty detail. I want to enter the sub-detail inside of my supporting schedule. Not very creative there, sorry. But have that roll up in here and then have that sort of put into the main tab, which you can see right here. So supporting schedules, like I said, they're very simple. It's either a sum or you do the math, and then you have this nice option here to either do the sort of imports at the total schedule level, or you can come in and manually insert the actual results line item by line item. Unfortunately, you cannot import into a supporting schedule. And the other sort of inconvenient thing about a supporting schedule is that if somewhere else in the model, if somewhere else in this analysis you wanted to link to an additional product one, you can't do that. If something's sort of buried in a supporting schedule, it's locked away. So a lot of times people ask questions, should I do this particular hourly labor times wages? Should I do it in a supporting schedule, or should I do this on the non-financial data tab? And I'd say it's really a question of personal preference, which do you like working with more, what do you think is more appropriate for this particular situation, but keep in mind, we can import into this non-financial data tab. You cannot import into a supporting schedule. And then once again, anything on the non-financial data tab can be used in a cascading series of other assumptions, whereas anything in a supporting schedule is sort of locked away. It's sort of in its own little world. So hopefully that sort of insight should let you know kind of what the important structural elements of this are. I am going to now talk about the week 1 case study, okay? And as I've mentioned before, you will receive, we're going to add every single person in this meeting to a Dropbox folder. This deck will be in the Dropbox folder so that your case study will be available to you. And what I want you to do for the first case study is we are going to start and build a completely hypothetical business. In other words, this is just an idea. Okay, you don't have any chart of accounts, you don't have any historical data. You've got an entrepreneur who's got an idea and some skills and the intuition to get this thing going. It can be, if you don't want to get creative, you can just call it the widget company, and you can just not spend 2 minutes on worrying about whether or not it's rational, as long as you meet the following requirements. If you want to get fancy, maybe you could build that business you've always dreamed about running when you're retired. I don't know if you have something like that, but or you can always do a real client situation. You know, if just by chance you've got this entrepreneur who's been asking you for help, and you say, hey, I could kill 2 birds with 1 stone here. This guy usually couldn't afford to pay me, but because Christian's making me do the work anyway, I'll charge him way less than I normally would. So what are the requirements? I ask that you start with an empty analysis and add the accounts one by one. Do not import a pre-existing chart of accounts. That is cheating. Although, you know, I don't know if I'll be able to catch you or not, but use the non-financial data tab to support some of your revenue and cost calculations. I want you to add a fixed term loan, a line of credit, and investor capital to fund, you know, to fund some investment, whether that is like the building of a workshop or something of that nature. I want you to have at least 15 accounts on the income statement and 8 accounts on the balance sheet. Create at least 1 subtotal grouping. Use 1 supporting schedule, and it should be 5 years with the first 3 years by month. Now, I'm going to jump over to an example of a company that is just like what we're talking about. This is a boutique guitar company, and as you can see here, I mean, this was truly started from scratch. There is no import here. I'm going to show you the import tool in a second, but all we did here is click, right-click, insert a category. I'll just call this guitar services or something. I don't know, whatever that means. Oops, my cap lock's wrong, but who cares? So you can insert the accounts one by one. Now, I will show you some basic methods here just to get you through this project. As you can see here on my non-financial data tab, I right-clicked, I inserted a category, I called it guitar units sold, and then it's coded as an entered by user, enter amounts directly into analysis. I have hard-coded my units sold of each guitar, and then I came to my income statement. I used the function of a non-financial item. I linked to the guitar's units sold, and then here is the price per guitar sold. Now, there is a whole video on function of a non-financial that will certainly equip you to do something of this level. Now, I'm going to have a function of a non-financial is a whole, I mean, it's an endless universe of possibilities. So I'm going to have, like I said, almost a whole class on that, a whole half class on that. But for the meantime, it's a very sort of easy thing to use. If you got some questions on that, we can handle them a little bit later. On the balance sheet, you know, we've got this this notes payable wizard. You know, anytime you add an account inside of the long-term liability section, it asks you if you want to use the notes payable wizard. This is as easy as entering the terms of the loan. We have a line of credit tool that will automatically advance and pay down the line of credit. I want you to be a little you know, I want you to make this sort of a reasonable situation. You know, don't just make it so that the line of credit's not advancing at all. But you can set a minimum cash balance, and you can set a credit limit or make that credit limit a percentage of AR and inventory. And then finally, to insert a common stock, all you do is you insert a category, common stock, and then you put in this little tool, you put the additions to the common stock. And for any equipment, same deal. You right-click, you insert the category, and then there's this schedule of additions. So everything else, to be honest with you, for this first exercise, you can just do You can just use the entered by user, enter amounts directly into analysis, and you can just sort of plug in the value you want. You can click on it. You can right-click and copy that amount off to the right, okay? In this particular example, the first thing I added was guitars units sold. Okay, I built that schedule. Here I have a series of sort of additional calculations using the formula method in the non-financials tab, but you don't even need to do this. Just kind of build a units sold schedule, maybe a head count. It doesn't have to be units sold. You could drive some of your expenses based on head count. So hopefully, you know, function of a non-financial, the loan wizard, the line of credit tool, and then that other method of entered by user, enter amounts directly into analysis. That's all you need to do to pass, okay? Next class is the deep dive on the forecasting methods. So that's why I gave you this sort of easier assignment up front. And you can always ask us questions as you're going through it. Now, obviously, if you meet these requirements, you will get your diploma. We don't give out grades, so what's your motivation to build a really cool sample company? Well, if we want to, so not everybody gets this, okay? You can't go, hey, you can use my project, but if we like your project and you say, yeah, you can use that, or yeah, let me sanitize it, let me take some things out and change some names, so that we can use it as a sample company, okay, and that we can distribute. We will be willing to give you guys credit towards PlanGuru products in the future. That could be credit for an upgrade. That could be credit for an additional user in your own office. That could be credit for a client. I'm not going to get into any more detail in terms of how the monetary amounts and and how you qualify. Don't call us, we'll call you type of situation on, sorry to put it that way, but you know, if you do a good job, not only will I be proud of you, but you know, you have some opportunity here to get some credit towards additional PlanGuru products in the future, because we really are trying to build a big, stable sample company. So I'm hoping you folks can really help us with that, because it'll help everyone's learning experience. So yeah, so that's the case study. I just wanted to sort of talk about adding the accounts from scratch. So importing. Let's run this import. I know I'm already over my hour. I suppose if you really got to go somewhere, you could, but I'm going to keep going here, and I will allow for a half an hour question and answer, regardless of how long this takes me. So I'm going to kind of prove that initial notion that I mentioned to you about how quickly we can get a company up and running. I got to take my cap locks off. I'm not going to use account numbers. I'll just call this, let's call this 5-year plan. I'm going to, because I'm using a QuickBooks sample company, I'm actually going to start this in 2018, which seems kind of goofy, but that's the way the sample company works. I'm going to add a blank template. I'm going to make this 5 years. I'm going to make the first 3 years by interim period, which is sort of the minimum requirement for your case study. I'm not going to use actual results at all. I'm going to bring in 3 years worth of historical data, all 3 years on a monthly basis. The seasonality profile is fine. That looks good. It all looks good. And I am going to just keep all my sections. I'm going to go up to my file menu. I'm going to import income statement and balance sheet. Now, I'm going to talk about the Excel import in a minute here, but first let's talk about the QuickBooks import. It is very easy to use. There's not a lot to it. Obviously, I can't use account numbers in this situation because I did not set the model up for account numbers. We also, you can either import out, you can choose to import zero balance or not import zero balance. Same with inactive accounts. Let me come back to this one, assign accounts automatically. I want to talk about import by class, okay? This is a beautiful feature for the QuickBooks import. You're doing the high-level work. maybe you're even doing the operating budget, but it doesn't, it doesn't make sense to break it out by class. You just import all classes. But if you do need to do sort of a multi-departmental situation, illustrated here, you can go class by class by class into separate workbooks by using this class feature. And then you build a consolidation analysis on top of that. I'm just going to import all classes. Sort of the ability to assign the accounts automatically, you'll see what that means in a moment. We give you the ability to choose what sub-account level you want to import at. Do you want to bring in the nitty-gritty detail, or do you want to consolidate sub-accounts into their parent accounts? If you had level 2 accounts and level 3 accounts, if you had 3 levels of accounts, there would be a third option to consolidate level 3 accounts into level 2 accounts. Very important, kind of goes to that discussion of show me the detail versus we're not that good. I'm just going to go right down here. I'm going to bring in a whole bunch of, 3 years worth of historical data. I'm going to click Next. So here is the point where PlanGuru and QuickBooks are going to be talking to each other a little bit. And I'm going to apologize again to the PlanGuru experts who are in the house. I'm sure this has been a pretty boring meeting to this point, but it will get more exciting next week. I promise you. Did this pop up on my? There it is. Okay. So on the left side of the screen, we have all the accounts as they sit in QuickBooks. On the right side, we have the different sections of the income statement and the balance sheet, and due to the beautiful automatic assignment feature, everything is assigned for us. I could just click import, boom, I'm done, 5 minutes, custom tailored model. Now I'm just going to do a couple things here. I want to show you, when you are not, yes, we have the vast majority of our accounts we have assigned automatically, but let's say you determine that, okay, I need all these construction income accounts one by one, but this reimbursement income, oh my gosh, it's just clutter. It's just zero balance, tiny little numbers. I am going to deselect them, which causes them to be removed from the right-hand side. I'm going to highlight, I'm going to right-click, I'm going to drag and drop, and instead of assigning them individually, I am going to group them into a single line item, which I will call Okay, did I spell that right? I think I'm missing an E, aren't I? I cannot spell when anybody's watching me type. Click OK. Now what we have done there, now this is not creating a subtotal grouping, okay? You obviously, I showed you those subtotal groupings earlier, and it might appear that this is going to create a subtotal grouping, but it's not. This is saying, I don't want this cluttering up my model. I don't want there to be 4 different reimbursement income line items that I have to budget for individually because it is just a nit. This is eliminating the detail, and henceforth it is going to bundle all of these accounts into a single line item. That option is only available to you when you are not using account numbers. Okay, so I'm going to click Import. You're going to see those accounts populate. You're going to see the whole thing spring to life. And here we go. Here's all that good historical data. I'm going to hide my historical data. Expand this so we can see the account descriptions. And I can now go line by line down my income statement, line by line down my balance sheet. Oh, I guess there's no, which one of these has activity? Of course, I picked the one that doesn't have activity. So we can go line by line down our income statement, line by line down our balance sheet, and refine or populate. Remember those vanilla assumptions, I like to call them. They're about the right size. They're about the right shape. They look right. You just don't spend you don't spend any time thinking about it. It's as fast as you can click and choose a forecasting method. So you can have that custom tailored model. You don't even have to do the assumptions. I mean, you could always just kind of walk up to your client with sort of the blank workbook. But we can get this up and running in a matter of minutes, and then we come in here and add the subtotal groupings. Okay, and these can be expanded and collapsed. So that is my kind of run through the QuickBooks import. It's obviously very straightforward. Now I'm going to loop back. I'm going to kind of I'll just create a new company again real quick. I should have saved one before I came in here, but oops, I didn't want to do that. In this particular example, I am going to use account numbers. It's a 4-digit account number. Okay, I'm just going to call this a March rolling. Oops. Okay, so I'm not going to do the vanilla start. Let's pretend like we're starting mid-year. There's no point in going back and building the budget for January, February, and March if the time's already gone. It's just a hoop to jump through. So we're going to pretend like we're sitting here in April, and we're going to pretend like we're sitting here in April and we're building a rolling forecast going forward. So I'll just call this a forecast. Once again, that doesn't change anything. You can add a blank template. Let's do, once again, 5 years, first 3 by month. Then I am going to use actual results through March. I'm going to bring in 3 years of historical. Let's just only do the most recent 2 by month. Just leave all this the way it is. Now, the one thing it does ask you to do in the event that you are using account numbers, as most of you should probably understand, we have this 2 special accounts within PlanGuru. One is the retained earnings account and one is the cash account. Those are sort of your ultimate plugs. And let me bring up this, here we go. So you just oops, I keep opening the wrong file here. This is what I wanted. Okay, so all it's asking me is what is the cash account number, 5,300, and what is the retained earnings account number, 7304. And once again, that is because those are those 2 special accounts that are structurally built into your PlanGuru analysis. Now, let's talk about the format, okay? Let's talk about the Excel import format. Now, as a supplement to this class, instead of I'm not going to spend time in here teaching you Excel formulas because I'm sure a lot of you know them already. But one of the most daunting pieces of this equation for someone who's not an expert in Excel is getting the data into this format. So instead of going through a bunch of different equations, we are going to, as I mentioned before, prepare sort of our an Excel file that has sort of most used formulas, VLOOKUPs and value searches and things that can truncate account numbers. So we're going to prepare that and we're going to put it in the Dropbox. It's not going to be in there today or tomorrow, but look for it for the back half of the week. So in terms of getting the data into this format, I understand that that's a big thing and we're going to give you guys some materials for that. But what is the necessary format? It is that you have all of your account numbers in one column. It doesn't have to be column A. It could totally be column B or C. But you get all your account numbers in one column. You get all your account descriptions in another column. And then you get your historical balances lined up based on how you set up the model. So since I want 2011 and 2012 data by month, I get the data lined up in Excel just like that. Now, I also recommend that you stack your income statement on top of your balance sheet or vice versa. In the past, this was a requirement. It didn't work if you didn't do this. It's not a requirement anymore. I believe that you can import in piece parts now. But as a matter of just ease, as a matter of just keeping things clean and easy, I do recommend that you kind of build one big import template, slam all that stuff in there. Now, once again, I'm going to give you that doc with all the great formulas and examples to show you how you achieve that. So let's close this. I am now going to go up to my file menu. I am going to import data, import income statement and balance sheet. I am going to select the Excel file that I am looking for. PlanGuru is going to open that Excel sheet, and I am just going to tag it up. I click, I right-click, I add a column selection. These are account numbers. I click, I left-click, I right-click, add a column selection. These are account descriptions. I then highlight all of these rows and all these columns, and I'm going to tag them up. And then I'm going to grab this next section, tag these up. Okay, and then finally, because I mentioned to you before, I am doing a March rolling forecast. I am going to come down here and bring in my actual results. Now, for the sake of time, I didn't go back through this on the QuickBooks import, but for both import tools, people come to me, they have everything set up, and they go, how do I get my actual results in here? And I say, the same exact way you set it up. So the import tool serves two functions. It gets the thing up and running, and then the very same steps will enable you to re-import over the old data or import new periods as we go. So I'm going to select bring in bring in 2013 data through March. I'm going to click Next, and we now get to the account assignment screen. Unfortunately, this is not a QuickBooks import, so we don't have the ability to assign everything automatically, so we have to do it the old-fashioned way of mapping it. It's not painful, though. I'm just going to grab these accounts, put them in the right places. For the sake of time, I'm only going to do the income statement. I'm just going to kind of map everything. I'm just going to click import. I do need to get this thing going. I can't believe it's 3:20 already. So there we go. We've imported the chart of accounts, we've imported the historical data, but what you can see in this particular situation is we do not have, we have actual results for the first 3 months of the year. And I'm going to have, we have a whole class on ongoing maintenance. So I'm really, I'm not going to be able to totally get into this kind of budget versus actuals and things like that inside of this. But just, kind of hold on to these. Hopefully you can remember how this looks like. You do not need to use actual results. This hypothetical business, the reason I chose for your first case study, so yeah, the requirements, so that you will get this PowerPoint. It will be in a Dropbox folder. You will all receive an invitation to that Dropbox folder. This was slide 14 with all the requirements. But you don't need to work with actual results here, so I kind of left that out of the equation for this first exercise. So don't fret that you don't kind of get that quite yet. We have a whole class on that later. So what else did I need to talk about? I'm almost done here, folks. So the memory of the import tool. Now I am going to very briefly, I'm going to go back through this. I'm going to say Excel import, browse. I'm going to grab the same file. I'm going to say, you know what? Give me an extra month here. May. Oops, I got to tag these first. Here are my numbers. Here are my descriptions. And then I'm going to grab, I already grabbed April, I think. Let's grab May. Okay. So you come in to the account assignment screen, and everything is automatically mapped for you. You do not need to remap anything. Is it on my other screen over here? It is. I've got like 30 windows open over here. Everything is assigned for you. So obviously this has two really important implications. Okay, the first is doing budget versus actual comparisons, doing rolling forecast. Okay, so getting those actual results in there in minutes is how this becomes transformational. It's how you eliminate that non-value add time. Now the other really important thing is when you're doing multi-departmental or multi-locational budgeting, you can stamp them out. And what I mean by that is you create your first entity, whether that's a division, department, location, yada, yada, yada. After that, you can literally come up to the File menu, do a Save As, call it. So if I'm working on Location 1, I build Location 2, I do a Save As, I rerun the import and point it to the historical data for Location 2. It will knock out this data, replace it with the data for the new thing. You can even go, so you take it a step further, start adding your subtotal groupings. Start building in forecasting methods that you want to universally use. If in all 3 locations you want to grow sales 10%, then build a 10% sales growth in, and when you re-import the data, it will knock out this data, replace it with the data for the second location, and that 10% sales growth will be automatically coded in there. So you build the first location, you build any common structure, any common methods, then you do Save As, rerun the import, point it to a different QuickBooks class or point it to a different Excel sheet, and you can really, and I mean stamp them out. I mean it can be a very fast process to structurally prop it up. You know, I can't speak as to how much time you're going to spend changing, forecasting, each line. I mean, that could take a week, but in terms of structurally setting everything up, it becomes very fast because of the memory of the import tool. Now, there's not a whole lot to talk about in terms of changing the model structurally. You can move accounts. Okay, so you can move an account from here to here. You cannot, unfortunately, you cannot move accounts from one group to another. It has to be sort of contained within a single group. So if you want to sort of change the structure, you are going to have to re-import. You can obviously, most structural issues, though, you should resolve before you import. But let's just say, for example, you determine that this is not an expense. It should be in cost. You can delete the account. Okay. I can then go up to my File menu, import data. I'm going to go right back through this one final time. Tag them up. Now I should technically tag all these columns if I'm going to change the structure. So please ignore that I'm only tagging one column, but for the sake of time, I just. So next. So since I deleted that count, remember I deleted gas. As you can see, it's no longer in my operating expenses, and it is no longer assigned. So I can now take it and I can simply remap it. So the import tool is extremely flexible. It's really hard to break. You really got to screw it up. I mean, I don't even know how you do that anymore. We've made so many sort of adjustments to the thing over the years. But you can just delete accounts, remap them, and it's very flexible, which is sort of one of the biggest advantages of PlanGuru. So, obviously, I've run way over my time, so we're going to open up the floor to questions. Everybody who stayed, I appreciate it. One final thing I do want to mention before I get to questions is something really exciting. Coming this fall, we are rolling out a tool called PlanGuru Analytics. You will get a demonstration of PlanGuru Analytics in later sessions. But if you would like to be an alpha or beta tester, we are looking for them. You are the first people we came to. In exchange for doing this, you will get some free usage of PlanGuru Analytics, which is going to be a cloud-based reporting tool. It's really, in our minds, it's really going to be transformational in terms of that final piece of doing this work, which is, running all the reports after you've done the analysis. In this future, you're just going to be able to do the work on your desktop and then send the data to this dynamic dashboarding tool with all the reports, charts, and graphs. So just wanted to mention that. Email Tom. I forgot to mention Tom. I told him I'd introduce him earlier, but Tom is on the call also. He is has a very illustrious background. He was did banking for 4 years, worked in the White House actually for a little while on energy policy. He also then went back to Columbia to get his master's degree in finance. So he's he's here sort of on the support and consulting team, but he's going to be a big part of PlanGuru University. He's going to be the one responsible for giving you, graduating you and things like that. So if you've got questions about missing class and things like that, his email is simply thomas@planguru.com. Tom, I'm going to turn the floor over to you if you want to say hi and then call on the first question.
Hi, everybody. Yeah, so as Christian had mentioned, my name is, Thomas Huang. You could simply call me Tom. I work very closely with Christian and the rest of the core management team here at PlanGuru. I saw that, as the lecture had progressed, there were questions that built up in the, question board. So what I'm simply going to do is just go from, the top to the bottom. And I believe Suzanne Willett, you had the first question since the last time that Christian had addressed the questions. So what I'm going to do is unmute you, and then you'll be able to ask your question. So one moment, please. Suzanne.
Hey, I mean, is it the question about the GST, Tom?
Yeah, exactly. Yep.
Let me just go. I can see all the questions. So
okay.
Yep. I doubt you're the only Canadian here, Suzanne. We will absolutely talk about the GST tool, just not today. It's not something I wanted to get into and set up, but it'll definitely be something covered in a later class. Joe is also from Canada, so getting to the next question, I confirm that you're not the only Canadian, and he's asking me the same thing. Same with Ryan. A lot of people looking for GST. I've never heard, what's HST? I don't know. But I'm sure it's the same thing. Jody's question, is this a cumulative project? So there's going to be, you do not need to finish everything by next week, by any means. Then again, I'm only asking you to build a model with a total of 23 accounts, and you can literally, for most of those, just put a number in there and right-click and copy it off to the right. So I really don't think this exercise should take you very long. So I encourage you to have it ready for next week, because we are going to sort of give people the opportunity to ask questions about their case study and things like that. But this is a rolling class. You really have the ability to, once you've attended all 6 classes, once you finish the case studies, you have a meeting with Tom, you then get approved, provided you did everything right. So you have as much time as you need to complete the project, but the sooner you get it done, the sooner you're able to sort of ask questions about it in class, and the sooner you get your diploma. And yeah, we can email the, to your second question, Tom, let's just pull that one slide about the assignment itself and we'll email that out to everybody. Tim's question, good one. I really should have mentioned this in the webinar. Does it matter if you're using QuickBooks Online or desktop network versions? Now, at the very current moment, we are not compatible directly with QuickBooks Online. At a high level here, it is a top priority from a development standpoint. We are working on it and hope in the near future to be able to pull data in from QuickBooks Online. I mean, not next month, but hopefully sort of end of this year, beginning of next year type of time frame. But you can always use the Excel import on anybody bringing data in from QuickBooks Online. Now, in terms of when you are running PlanGuru and QuickBooks, you said, is it desktop or network? Well, they need to be in the same place. We have a desktop edition. It is probably the most popular way people use the program. We can also run PlanGuru in pretty much any, I'm not even going to say pretty much, any environment that you can run QuickBooks, we can run PlanGuru. Right Networks, Cloud9, Novel Aspect, any of those people who are out there serving up QuickBooks, or your own internal network. Obviously there is an additional fee for our networking capabilities, but that is, we can put PlanGuru wherever you need it to be in order to be able to run those imports effectively. So Ted's question is, subtotal grouping seems to work well when accounts are in a sequence. How do you grab accounts scattered in the chart of accounts? Well, you can't. They do need to be in sequence, but yes, you can move accounts. Now, this does not screw up the mapping on the import tool. So if I needed to move some accounts around to put a whole bunch of accounts in a row, you can move the accounts, group them into the proper sections, but unfortunately you cannot say take this, take this, take this, and create a subtotal grouping. Another question about the case study requirements. Suzanne, we will be sending those out on a one-sheeter, as you heard. Ryan has a question about a link to an Excel function. Why don't you give me a second here, Ryan? Let me finish up some questions that have to do with today's lesson, and then I'll be happy to loop back and talk to you about that live link to an Excel feature. Suzanne has another question. Do you import the budget actuals too? Can we unmute Suzanne, Tom? Let's see if she has audio.
Sure. Okay.
There, I got it. Suzanne, are you there? Okay, I'm not exactly sure what that question is. It says, do you import the budget actuals too? So I'm going to take a guess here at what you're asking. And my guess is that you are saying, okay, I've got this one client where I have already developed their budget. Most people that come to PlanGuru, just to take it back a notch, most people are buying us to build the budget and then do the ongoing maintenance. But occasionally we get somebody who comes to us, they say, I've already got a budget built. I just want to slam the budget in there, and I want to import I want to then do the budget versus actual comparisons, the rolling forecast, all that good stuff. The short answer is we have a sort of a roundabout way to do that. And the answer is yes. It's nothing, you don't need to be a programmer, it's nothing crazy, it's just a series of steps that we ask you to follow. There's no feature where you can say import budget. What we have to do is we have to import actual results and then pull those actual results onto the tab, and then we copy the analysis. There is a knowledge-based post for that. Tom, do you know where that knowledge-based post is? If you could try to dig that out and put it in the questions field, maybe we'll even add it to the deck.
Okay, sure.
So there is a knowledge-based post that will explain to you how to build a budget. How to import a pre-constructed budget. That being said, I don't recommend that. If you've already built the budget, if you've already spent the time thinking out what the budget needs to be, figuring out how you came up with those calculations, I think it's oftentimes just as easy to recreate that budget in PlanGuru the right way. So if you forecasted revenue by taking last year's revenue, if you forecasted let me just go into my example on the screen here. If you forecasted a revenue account by taking last year's revenue and growing it 10%, and that's how you came up with the number, I don't recommend that you import a static number. I recommend that you take that logic and replicate that logic inside of PlanGuru so that it is properly constructed from the ground up, and it will give you a much more dynamic tool to use on an ongoing basis. So yes, we can wholesale import a pre-constructed budget. My general recommendation in a lot of situations, though, is that it won't take you that much time to simply recreate all that work you've already done in PlanGuru, and that will yield a better end product. Okay, so that's that, but we will we will send out that, I'll put it in the deck. I'll put a link to that knowledge-based post about importing a budget inside of the deck.
Hey, Christian, this
yes.
is Tom. I'm actually I have the link to the importing budget amounts workaround in our knowledge base. So do you want me just to include that in that deck, or post it into the questions, or?
How do you? I can't. Yeah. Post it into the questions and send to all.
Okay.
So reply to Suzanne's question and then send to all. So if you want that, if you've got a situation, I'll put it in the deck, and Tom's gonna just ping it out through the meeting right now. So look at your questions field shortly. Okay, next question, Jody. Should we make one? Should we make a good one? So the case studies will be different projects. For one project, I'm going to have you run a QuickBooks import. For one project, I'm going to have you run an Excel import. So they're all going to be different. None of them. I mean, I'm not trying to take you guys back to college, despite the name of the course. We just thought that'd be a cool name. I realize that you're out there in the working world trying to make money, and you don't want to spend hours and hours and hours working on PlanGuru case studies. That being said, we do sort of want there to be diversity in the nature of the product, so the case studies are not cumulative. This case study for this week should really should not take you a tremendous amount of time. It's not cumulative. Once we're done with this, it's over. So hopefully that answers your questions. David Mayo, I'm reading your question now. Okay, great question from David Mayo. How do you deal with a client who wants to create the model, teach their accountant how to use it, and then you are done? I would like to have clients as an ongoing client. Well, I would say this is a great question, and it's something I think Tom, make a note here that we should probably address this to everybody, because I know some people have left, but it's probably something we should work into the course.
Okay.
Now, obviously, I would say if I had to, I don't have any stats to back this up. I haven't run a study, but I would say for the vast majority of our, of the folks in your shoes, for the small, for the the entrepreneurs, the mom and pops, the small businesses, some medium-sized businesses, they don't need Plan Guru. Okay, you're going to be the owner. You're going to be the plan manager. You're going to work with the client collaboratively on the inputs, and then you are going to run the import to the actual results. You're going to take a look at it. You're going to come up with some intelligent thoughts, and you're going to call the client, do a go-to-meeting, send the client reports, and have that review process. Client never touches Plan Guru. But for different, more complicated situations, you need feedback. You need to push bigger companies with more decision makers. The ownership of this process needs to be pushed down, and that is just part. It's just part of it. Now, in a best case scenario, you're usually dealing with a little bit bigger company, so they have a little bit bigger budget. Using something like a novel aspect, which is our Plan Guru. If you go to our website, we have the Plan Guru Cloud. This is a platform on which you can do the heavy lifting. You can do the setup. You can do the imports. You don't teach the client how to import, okay? You own the nuts and bolts of it. That means, and more importantly, so let me step back. You set it up at the beginning of the year. You run all the imports. You build the consolidations, and then you, using some sort of delivery mechanism like a Plan Guru Cloud, or maybe you share the files with the client. I don't know, but you then turn it over to the client. Let's just say you have the CEO, and then he has 3 managers underneath him. All 3 managers need to do inputs. All 3 managers need to kind of add into the equation. You got a consolidated situation. They all want to be able to tweak it and manipulate it and really spend some good time refining their budget. But you can be the plan manager. You can set it up. And then if by using something like the Plan Guru Cloud, you're going to be the one that runs the monthly imports. You get the data in, you get everything lined up, and you, as the finance accountant, numbers guy, as a person who engages in this with dozens of other clients and has the expertise, you will also be in a great position to have that, drive that monthly discussion of what happened here. Hey, Cindy, you're the purchasing manager. You said gross profit margins for your department would be this, and they're this. What the heck happened? It's more than just the mechanical steps. It's about continuing. It's about driving a process. It's about asking the tough questions to stimulate the discussions that drive to better decision making. So yeah, there's going to be clients where they want to handle it in-house. Bigger companies tend, as companies get bigger, there's always a deeper need for them to have more and more hands-on. And yeah, you might lose some of those folks. They might take it away from you. But for your smaller businesses, they don't even touch Plan Guru. For sort of a middle phase of company, you can act as that plan manager. You can act as the facilitator. You can act as the discussion driver during that monthly review process. And all of those things can make it completely painless for your client, and they're willing to pay you to do the mechanics and facilitate the discussion, because your intelligence in these topics will drive, like I said, drive a better process than what they could do internally. So hopefully that was helpful, Dave. I will, so Steve Himes is gone, but he asked a great question, and we do have authorization to give you folks 2 hours worth of CPE credit for, I'm only authorized, we are NASBA licensed, so we are authorized to give CPE credit in all 50 states. I only have, we're only authorized for 1 2-hour course. Obviously, what you encounter in PGU is everything in that course times 20. So, we will be able to give you folks 2 hours, only two, I know it's a lot more than 2 hours. You're almost spending 2 hours with me today, but I will give everybody 2 hours with the CPE course. Jeff Sully has a great question. Whatever happened to the RMA analysis? So, I will, this is kind of a not necessary, well, Jeff, let me just see, because let me come back to that, Jeff, because I did have another it's not quite a question for today, but I will answer that. Give me 2 seconds. I just want to kind of answer sort of today type questions regarding larger clients who use PlanGuru. So I'm at Babette's question here. Regarding larger clients who would use PlanGuru, can you control security and limit what they can see based on permission, roles or permissions? Absolutely. If you were to do the situation I described earlier, set up a client, set up a cloud environment for each individual workbook. So to take you back to this Excel diagram, each spot in the hierarchy, for each one of these, you will say who can look at this, who cannot look at this, and who can look at it and write to it. So no access, read-only access, or read and write access. So Ryan, the link to I will talk about the link to Excel next week. I was going to talk about that to you right now, and then I was going to answer Jeff Sully's question. The live link to an Excel worksheet. Let me open another file. Jeff, I'll get to your question in 2 seconds, Ryan. I'll show it to you right now. Jeff asked about RMA data. We calculate all these budgeted ratios for you inside of PlanGuru. We still calculate the ratios, but we do not directly interface with RMA, which is Robert Morris and Associates. They pull a whole ton of banks. The reason for that is because we got rid of our Business Analyzer tool. The Business Analyzer was nice for a lot of our CPAs, but sort of anybody who was using the product internally found it to be extremely rudimentary. So we are in the process of developing PlanGuru Analytics, which I mentioned to you earlier. This guy right here. In the first iteration of PlanGuru Analytics, we will not have the RMA data interface, but once we get PlanGuru Analytics up, once we make sure it works, a top priority, because of people just like you, Jeff, is going to be to interface with that RMA database. So all those ratios will go up into this cloud, and I don't know if it's 6 months later, but or whatever. Don't quote me on these time frames. If my development department heard me, they'd be getting upset with me. But we are absolutely going to incorporate RMA into PlanGuru Analytics. So. It's going to be way more robust than what we had in the past. Ryan, the final question. Everybody who's still with me, you're awesome. Thank you for staying this long. Live link to an Excel worksheet. Very, very simple thing to use. Why do you use it? Well, we can do a lot of creative things in PlanGuru. When you take into account the non-financial data tab, we can do 99% of what everybody asks us for. Now, in certain situations, I had a customer who had 2,000 lines of data that needed to be boiled into a single forecasted line item. It did not make sense to replicate that type of a calculation in the non-financial data tab, so we did the calculation in Excel workbook, and we did a live link to that Excel workbook. Now, I'm going to insert a category. I'm going to make it a live link. I'm going to browse. I'm just going to pull up that sample file that I had before. I'm going to highlight a number of columns. Let me just do it this way. I'm going to add a definition. I'm just going to do 1 year. I'm going to click OK. I'm going to click OK again. And there we go. We have just linked to that Excel workbook. And at any point, if we go into that Excel workbook and change the values, we have the ability to refresh the Excel links. So to be honest with you, I hope you don't have to use this feature very much. If you're getting into bigger multi-departmental situations where you need to do allocations and things like that, that's another example of where you might use this live link feature. I will talk about it again next week, so this is, this is really not part of today's lesson, but I thought I'd answer it just since we're here at the end. So hopefully that was helpful. So great. That's all I got today. If you want to ask, if you've been sitting there, you got a question, you can't really, it's like you don't really know how to type it up, go ahead and raise your hand. You should see that little hand raiser in the GoToMeeting control panel. I have nothing else. I'll just sit here and wait for any additional questions. You can send me a question. You can raise your hand, and we'll unmute you. But other than that, thank you. Sorry for going so late today, but I think we covered a lot. So, great.
Hi,
Tom, whose
Tanya.
hand? You see someone's hand came up?
Hi, Tanya. Was that hand yours? Tanya, if you're there, I actually unmuted you so you could actually just speak.
Okay, it doesn't sound like she's there. I don't really. Can you mute yourself, Tom? Just that
Sure.
we'll be able to kind of hear.
Absolutely.
Test. No, I don't think she's there. Wait. So let me unmute her now. No, she's not there. I don't think she has a microphone. You can usually hear it. You know what I mean? So. Okay. Well, I think that's it then. So, we'll close it up here today. Thank you very much, everybody. See you next week.